So today we're going to talk about a UK stock that is on fire. This is a stock that's performing absolutely amazing, and it's a stock that has, in my opinion, very good upside on the share price, but also has that really beautiful combination of having a very healthy dividend. So you're getting a stock that will potentially give you good share price appreciation, and while that is happening, you're going to be collecting a very good dividend yield. So we're going to go through this one today. It actually brought out its full year earnings yesterday, so we'll have a look at them. And the funny thing is, yesterday I was talking about a stock in a bit of a negative manner. So yesterday I was talking about a stock where you have a share price that's going like this and the financial performance is flat, and those are the stocks that I don't want to be buying at the moment. What we want to be buying, or what I want to be buying, is looking for stocks that are having their financial performance going up like this, but their share price is declining massively. And those are the opportunities in this bear market that I want to be capitalizing on right now. And yesterday we talked about a stock that I don't want to be buying, but this is one of those stocks that I think is one of those fantastic opportunities. When you look at the financials of this company, what you have is a share price that's declining massively, down over 50%. But when you look at the financials of this company that's supposed to be a dividend stock, the financial performance is absolutely amazing. So this stock is one that I own. The financials that came out yesterday were really impressive, and all this is creating is me wanting to buy more of this stock more and more while that share price is declining, but the financial performance is absolutely amazing, because in the long term I think this is going to give me a very good upside. And I think this is one of those rare stocks that you have out there that will give you, in my opinion, 2x upside in the next 5 years, while also collecting a really nice dividend. So we're going to take a look at that stock. Now, just to let you know, if you're on the Patreon, I have just dropped the UK portfolio review for July on there. So do go check that out if you are on the Patreon. If you want to join, link is in the description. But getting on to the stock today. So this UK stock is called Cakebox. So this is a 73 million market cap. So it is quite small, so just be very careful of that. But Cakebox is a store and also an online store now. It has a lot of income from its online business that sells eggless cakes, and these have come very popular in the last few years, and the expansion through locations has been absolutely fantastic. Now, this company trades down at 14 times earnings, and in fact on a forward basis this is actually down to I believe it was a 12 that I worked out this morning. You'll have to forgive me because I worked this out this morning and it's been a long day at work since I did these numbers, but I think it's around about a 12, which is obviously incredibly cheap. I think when you look at this valuation for what you get for this business, I think this deserves to be, much more of a premium. So I think it's already undervalued now. That classic saying of getting a stock that should be worth £1 at 70p. I think that this is it's already undervalued. I think when you factor in the growth that it's going to have, that also gives you even more upside, which I think is absolutely amazing. And you can see here that it actually collects a 3.3% dividend yield. Now, I've not double checked if that's actually correct with Google, because I think it could potentially be a little bit higher, but nevertheless, my point stands of that it's somewhere between that 3 to 4% range, which is an absolutely lovely dividend yield. And the first point I'm going to make is, you can see here from a share price point of view, the share price has actually lost 54% of its value since November. And during the peak here, you can see that it was actually down 65%. Now that it's actually down at the £1.73, or as of today, £1.85, we've not really been these sort of prices since 2018. And basically the stock has been stagnant for a while. Now eventually it did actually start getting some respect that it deserved, but then unfortunately we kind of entered this bear market and that sent it down massively. But I think this is a really good buying opportunity. Now there is one little negative that I will talk about, but I'll leave that to the end of the video because I want to talk about the financial performance for now. But you can see here, this has had the company's had no respect on the valuation or the share price, which I think will happen one day, because it's only so long people can avoid this stock. Eventually people are going to wake up and be buying this company here. And when you look at the past performance of this company, I mean, look at this, like we said, 2018, it's been absolutely stagnant on the share price, but you look at the profit and the revenue, and the profits, over that period of time has tripled. The revenue's tripled. And even if we go back to, 2020, the profit and revenue since then has over doubled, and the profits over doubled, which is, a fantastic performance. And going forward as well, I think Catebox will still offer high single percentage amounts of profit growth and revenue growth. And putting that combination, that I think Catebox is already undervalued at this point. I think they should be more towards 20 to 25 times earnings. You also factor in a 8-9% growth on profit and revenue. This is where you're getting this kind of 2x opportunity from. And that's ignoring the fact that what Catebox also has is very good profit margins. That profit margins is going to be obviously leading to dividend, which obviously it does already, potential share buybacks. And I think at the moment also it makes a very interesting acquisition target. Someone like Greg's that wants to keep that growth going up. Got someone like Catebox here. Could be an interesting move, or anyone like that, I think, in particular. Anyway, going on to the financial performance. Fantastic. So this is the full year for the 12 months ending March 31st. So this is coming into the period of time where obviously we had the kind of slowdown through January, February, March. So these 3 months of that period of time in here. Revenue, 50% growth. That is correct. A company that is valued at 14 times earnings, 50% growth. Gross profit, 45%. EBITDA, 79%. Pre-tax profit, 83%. Adjusted pre-tax profit, 48%. Cash, up 29%. Earnings per share, up 88%. Final dividend recommended, up 37%. Yeah, look at that for the results. So as you can see here, very, very impressive results. You can see the key thing is expanding the stores that they have. And look at the online presence. 41% online growth. Really good online growth. You can see that they opened 31 new stores compared to 24. 185 franchise stores in operation. Kiosks, this is really interesting. Continued expansion of kiosk offerings. These are the smaller ones, which I think have a lot of room to grow. I think this actually has the most potential in the business. They actually have one of these at the Trafford Centre, and I've seen it before, and there was a massive queue for it. 15 now in supermarkets. That's quite interesting. Partnership with Asda there. And that was at 5, so that's over tripled. 20 kiosks in shopping malls, and in 2021 there was 16. I think that has a lot of potential as well. New warehouse opened in Enfield in December 2021. And this is the key thing, ignoring the fact of new store openings, the kind of recovery phase or anything like that. Like-for-like sales was still 12%, which is what I think they'll grow at, 8-9% potentially going forward. So that's still really strong on a like-for-like basis, and that's not factoring in, any other expansions here. And when we look at the outlook was sales have remained robust post-period end against a very strong comparative trading period in financial year 2022. However, the board remains mindful of an increasingly challenging economic and trading environment. So a bit of a mixed feedback here. You can see here that they're saying that basically sales are still pretty positive. However, I think they're being very cautious that increased costs may affect them. They might have some sort of slowdown. So what I'm kind of taking away from here is that everything's still going quite well with Catebox. They haven't really been affected. However, there is the potential that there could be effects in the future to this business. But at the moment, it looks quite positive here that they're still doing very well, which is great. So overall, financially performing very good, as you can see. Revenue and profit moving very well in the right direction. That dividend, you can see here that it's a 4% on Simple Wall Street, is getting hyped up because they're making so much profit, which is great. And the great thing is that it's an owner-led company. The founder here is the major shareholder at 24%, which is also really positive. He's been there since 2008. So these sort of companies make me really confident to be invested in. So it's quite rare to find a company that's performing this financially great, have a massive dip in the share price, at a good valuation, that dividend growth. I think this is one of those amazing stock opportunities where you're getting, growth and a dividend at a good valuation. I think it's a great opportunity here. So this is why I'm probably going to be picking some more shares up in Catebox in the next coming few weeks. Now, the only little concern that I mentioned before that I had was that period of time where you saw the dip in the share price. Obviously, everything got pulled back. Now, this company did have some negative media posted about it, where they did say that they have a inventory issue, which Catebox did come out and say that is correct. We have rectified that, and that was it. It's nothing major, there's not fraud in numbers. It's dealt with. We've moved on, and Catebox themselves have put things in place to avoid anything like that happening again. However, it seems like the combination of this bear market and that sort of news has somehow wiped off, half the valuation of this company. And to me, this seems massively unjustified. And I think this is what has created a massive amounts of fear and created a very good buying opportunity in a company that's performing amazing, and now put it at a very, very cheap valuation. So I look at this business, I think financially it's performing very well. And the valuation, I think, is just quite a bit ridiculous for this business. And I think that negative that was there has gone with the inventory issue. And I think that this bear market shouldn't really be affecting this business, because as you can see here, as the share price is going down like this, everything inside the business, the financials of that company, is just moving more and more in the right direction. So I think it's a good opportunity. So yeah, that's a bit of an update in Catebox. And like I said, very impressed. I think it's a great opportunity. I thought I'd share that with you guys because I think it's worth looking at. And yeah, I will be considering buying some more shares in this in the coming few weeks anyway. So I hope you enjoyed the update on this UK stock, guys. If you could hit the like button if you're new, subscribe. And I'll see you next video.